What's up, cryptocurrency investors? My name's Landon. You're watching Crypto Review Central. If you're a cryptocurrency investor or are just interested in this space, subscribing is a wonderful idea. I provide market analysis as well as trending topics. So if it's happening in the cryptocurrency space, you can be sure to find it here. We are still giving away $50 in Bitcoin as soon as we hit 200 likes. So once you finish watching this video, remember to smash that like button if you found it informative and comment something of value. We are a growing community of like-minded individuals sharing ideas and amazing, thought-provoking engagements, and I welcome both new and old viewers to the CRC crew. With the cryptocurrency markets enduring bearish trends for months now, here and there interspersed with signs of upward motion and redemption. All but one have fizzled out, the bull trap so far that we are in right now. Bitcoin dropping below $6,000 made headlines last week and quickly found support at $5,800 and was pushed up to $6,300 within 24 hours of dipping. What did that show? Well, it showed that the investors did not want to see any lower than 6K and gave some hope to the investor base that we could still see $10,000 this year. Although we're far from McAfee's prediction of $15,000 by the end of July, which is this month, and while that is still possible, it's not looking likely. We've seen a hiccup on the road to 7K and hopefully 10K shortly thereafter, and all we can do is continue to monitor the cryptocurrency markets for any further indications of a complete trend reversal. As I say often on this channel, development is rampant. Governments and companies around the world are investigating blockchain technology for their own benefit, as well as studying the implications of a switch to the more efficient consensus algorithm methodology that blockchain possesses. CoinDesk reports that Bitcoin rose to $6,785 on Bitfinex Wednesday, which was yesterday, the highest level since June 22nd, and looked set to test the psychological hurdle of 7K, as suggested by Monday's bullish breakout. However, the bulls failed to muster enough momentum to cross 6,754, which is the 23.6% Fibonacci retracement of the drop from 9,900 to 5,700 on a daily closing basis, establishing the Fibonacci level as a stiff resistance. Further, a detailed look at the technical charts reveals that the area around 6,754 is packed with moving average lines and Bollinger Bands, all working in unison to put brakes on the Bitcoin price rally. This chart here shows the upper Bollinger Band is located at 6,570 and the 200 moving average is seen at the 6,717, with the 23.6% Fibonacci retracement located at 6,754. The Bollinger Bands are sloping upwards in favor of the bulls, which is a very good indication. We just needed to get confirmed. Bitcoin is trading above both the 50 and 100 moving averages, and both of them are trending north, biased to the bulls. Bitcoin has created a rising channel-like structure, which is a bullish setup. According to this chart, the odds are stacked in favor of a convincing move above the resistance zone of 6717 and 6770. A move above both those numbers could result in a significant push up into 7,000. The daily chart also favors a rally to 7K. However, if Bitcoin fails to pick up a bid in the next few hours or in the next 24 hours, the focus will likely shift back to a bearish RSI divergence seen in the 4-hour chart. In this case, the rising channel could be breached to the downside, triggering a deeper pullback in Bitcoin prices. A close below 62.75 would essentially scrap all this bullish activity, and the markets would resume bearish, hopefully not breaching 6K again, but finding support at 6,100 as we have in the past. Then we move into Reddit, as always, with an ongoing discussion on the European Parliament, and governments from Europe are investigating cryptocurrency and potentially offering some institutional investors some more friendly products. With reports that Swiss banks are welcoming cryptocurrencies happening a few hours ago, businesses in Switzerland are urging the Swiss government to permit the banks in their country to welcome the option of a crypto transactional system. Switzerland's Zug is already famous for being known as the Crypto Valley, and it seems the Swiss are continuously striving towards development in the crypto space. The biggest roadblock being fear of money laundering. The problem has to be resolved effectively and quickly in order for the crypto industry to see any growth within Switzerland. Zug has adopted various technologies to take the initiative of developing crypto forward, and it's recently announced the success of blockchain technology in voting systems. They go on the record and say, "We hope to clarify relationships by the end of the year at the latest. Time is pressing. Other jurisdictions such as Malta and Singapore are very active and making a lot of effort to attract these companies. The lack of access to bank services is a significant competitive disadvantage," the finance director of Zug said in an exclusive interview to an economic publication. Bloomberg also reports that Europe's largest trader of exchange-traded funds is moving into cryptocurrency despite its regulator urging consumers and institutions to not buy and sell crypto. This is another positive step towards widespread use of digital currencies and helps the average cryptocurrency investor like you or I retain a positive outlook on the future of this space. Bloomberg also points out that while 5 big US speed traders are already making markets in cryptocurrency futures or the underlying currencies, Amsterdam-based Flow Traders is the first firm anywhere to disclose its buying and selling of cryptocurrencies listed on regulated stock exchanges. Publicly traded assets or funds would broaden the appeal of virtual money as an asset class by providing a straightforward and cheaper way of investing in the likes of Bitcoin and Ethereum, as well as a number of other altcoins. People underestimate cryptocurrency. It's big and it is to be regulated very soon. The market participants are much more professional than people think. Institutional investors are interested. We know they are because we get requests. However, this enthusiasm isn't reciprocated by its regulator, the Dutch Authority for the Financial Markets, as they discourage activities in crypto both by consumers and professional license holders. By virtue of its newness and anonymity it potentially offers, it is very prone to abuse. Given its inability to serve the promised purpose as a currency, we don't regard it to be an asset class. Although they may dislike crypto, there's little it can do to stop any firm from trading regulated securities or derivatives on a regulated exchange. Flow Traders seems to be making a move as a number of banks and investment firms push into the fledgling cryptocurrency space. Goldman Sachs is setting up a digital assets trading desk along with Bloomberg, and Barclays PLC recently agreed to provide UK banking services for Coinbase. The push to go mainstream has continued unabated, even though the value of Bitcoin et al. Has plunged more than 55% this year, and it still is up over 100% since this time last year. With growing interest from institutional clients willing to invest in digital assets, I can see why so many proprietary trading businesses are now focusing on this new asset class, said one managing director, working for a company that is part of the London-based CoinShares Limited. Cryptocurrencies have come in for intense criticism in the first part of 2018. The Bank for International Settlements, a central bank for other central banks, outlined 3 big problems. Cryptocurrencies are too unstable, use too much electricity, and are vulnerable to manipulation. Like regulators in other countries, the AFM wants to see a global agreement to regulate cryptocurrencies, some sort of universal agreement. Since cryptos are global in nature, we firmly believe that only a globally regulatory response has a chance to be effective. It's a very interesting perspective, and we will continue to monitor all of the discussions on any potential regulation, as well as ideas for regulations such as these. Each country seemingly taking their own approach, and regulatory bodies differing immensely across their definitions. The Securities and Exchange Commission has its own position. The UK Financial Conduct Authority and their counterparts in Japan, as well as other major markets, each taking their own approaches. Policing digital tokens will probably be a patchwork for some time to come, say many experts, which means solutions are not going to be widespread. It will take a lot of time for some of these ideas and some of these new policies to gain momentum and really get tested and vetted. Hopefully in the end, we will be left with a much more stable market than we are currently seeing, and hopefully one that is valued at larger than $500 billion. Because in my personal opinion, until we break 500 billion, we are still seeing very bearish markets. Nevertheless, nobody knows the future, and be skeptical of anyone that says they do. They likely have ulterior motives in selling you something or promoting their own products. All anyone can do is continue to monitor the markets. Continue to follow us here at Crypto Review Central, and over time you can slowly develop trust with certain content creators, as well as certain media publications that provide unbiased, up-to-date, factual information that you can go forward and make educated investment decisions. We're still giving away $50 in Bitcoin. All you have to do is smash that like button, comment something of value along with your Bitcoin wallet address, and once we hit 200 likes, we will roll that out. Hang in there, keep fighting the good fight. We are really onto something big here, as this space shows so much promise for widespread change, brought to you by the consensus algorithm. Thank you once again for watching. My name's Landon, and I'll see you all tomorrow.